In this video, we're going to talk about an indicator that is both a trend filter as well as a buy-sell indicator, which means this indicator can be used to either identify the trends in the market or to identify the buy and sell entry points in the market. Stay tuned because we're going to explain what this indicator is, how it works, as well as the best settings that you can use for optimum profitability. If you find value in this video, remember to leave a like. Let's get into it. Now, the indicator that we're talking about is called RMI Trend Sniper. To add it to your chart, go to TradingView and load any trading security that you like in any time frame. For me, I'm gonna be using the 1 hour time frame of GBP/JPY. Then open the indicator search tab and type in RMI Trend Sniper and select this one by TZAC88. The RMI Trend Sniper is a technical analysis indicator. It's designed for trend-following strategies, and it's particularly useful for identifying potential buy and sell signals in the market. This indicator integrates the elements from the Relative Strength Index and the Money Flow Index to offer a holistic view of market momentum and strength. The RMI Trend Sniper fuses the principles of the RSI, which measures the magnitude of recent price changes, to evaluate overbought and oversold market conditions. It also includes the Money Flow Index, which is a volume-weighted version of the RSI. This makes sure that the RMI Trend Sniper takes into account both volume and price to assess the buying and selling pressure in the market. This indicator consists of 3 key elements: the trend ribbon, the buy and sell signal labels, and the bar colors. The trend ribbon shifts color between blue and green, indicating the trend direction of the market. During a bullish trend, the ribbon turns to blue and the bar color changes to green. A bearish trend is signaled by a red ribbon and red bar color. The buy and sell signal labels appear when there is a shift in the trend. A buy signal emerges as the trend moves from bearish to bullish, and a sell signal appears when the trend transitions from bullish to bearish. Now, there are several ways that we can use this indicator to trade. The first method is really simple because it involves us entering a buy position whenever a buy signal is printed. We could set the stop loss right below the trend ribbon, and then to exit the trade, you simply wait for a candle to close below the ribbon, and then you exit your position. For this particular trade example, you can see that this trade would have been super profitable. For a sell position, you would do the opposite. So you wait for a sell signal to be printed, and then you enter your position on the close of the signal candle. Set the stop loss just above the trend ribbon, and then to exit your position, you wait for a candle to close above the trend ribbon, and then you exit the trade. Simple. Next, we will explore a second strategy that I like to do with this indicator. But before that, let's talk about hankotrade. Now, you may be thinking,
and what exactly is hankotrade?
Well, hankotrade is one of the most reliable forex brokers out there, and for that reason, I use them every single day. As you can see here, this is my trading history. I mainly scalp gold, and up here you can see that this is actually a live account. The reason why I love hankotrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. And for those of you who love high leverage, guess what? hankotrade offers a maximum leverage of 1 to 500. And if that's not enough, they're also going to give you a 100% bonus for all your first deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500. So in total, you'll have $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to hankotrade using the link in the video description. Now, back to the video. For the strategy I'm going to be showcasing in this video, we need to add one more indicator to the chart. Open the indicator search tab and type in market bias. Select this one by Professor X. Then double click on it, and on the inputs tab, we want to change the period to 150. For the smoothing period, we're going to change it to 30. And then disable the show HA candles option. After that, click OK. We're going to be using the market bias for two things. One, to identify long-term trends in the market, and two, for pullback identification. When the trend ribbon of the market bias is colored green and the price is trading above it, this indicates a bullish trend. And when it's colored red with the price trading below it, this indicates a bearish trend. A pullback within a bullish trend is identified when the trend ribbon changes color to dark green. In a bearish trend, a dark red color indicates a market pullback. Now let me show you an example of how we can combine these two indicators to enter a long position. So right here, there was a long trade with a risk-reward ratio of 1 to 1.5, and we could even push this to a risk-reward ratio of 2. Now the question is, what were the conditions that prompted us to enter this long position? Well, first of all, we can see that the trend ribbon of the market bias indicator was colored green. This indicates that the market was in a bullish trend. Second, we can see that a pullback happened just before our entry. How we know this is because at this particular area, the trend ribbon was colored dark green. So this is a pullback. This is also a pullback, and this is also a pullback. But we're going to be focusing on this one because of the next conditions that we're going to be discussing. So condition number 3 is a buy signal. We need a buy signal to be printed. So basically, this green upward arrow, we need it to be printed by the RMI Trend Sniper. This indicates a short-term trend shift from bearish to bullish. This long signal also indicates the end of this market pullback because, as you can see, it was printed right at the end of the bright green area of the market bias. Then the last condition is we saw that there was a support level right here, and then the price bounced off it 2 times, here and here. When the price bounces off of a support level within a bullish trend and an indicator signals a possible upward continuation in price, this immensely increases the probability of the price heading back upwards. Because of all these conditions, we enter a long position. And as you can see, that trade was profitable. Different trades will have different entry conditions, but the main conditions remain the same. So let me show you another example so you can understand it better. So in this particular trade example, we can see the previously discussed conditions. The market was in a bullish trend as indicated by the trend ribbon of the market bias having a green color. And then the market did a pullback as indicated by the dark green area of this trend ribbon. Now, the pullback ended when a buy signal was printed by the RMI Trend Sniper, as you can see right here. This indicates the end of this pullback. It also indicates that the short-term trend of the market is shifting from bearish to bullish. So this becomes our entry candle. Then our price action confluence is that there was a resistance level right here which turned to support. The same level acted as a support when the price bounced off it at this point. Because of this, it increases the probability of the price heading all the way up to take profit. Now, you may be thinking,
But where do we place our stop loss?
well, you could place your stop loss right below the support level, or you could place it right below this blue ribbon of the RMI Trend Sniper. For extra safety, I recommend placing it just below the support level. And as you can see right here, this trade was profitable with a risk-reward ratio of 1 to 1.5. Now, here's a short trade. For this short position, the conditions are the reverse of what we did for the long positions. So first, the market was in a bearish trend as indicated by the trend ribbon of the market bias being colored red. And then a pullback happened. To confirm the pullback, we use the market bias indicator. When the market bias changes color to dark red like it did right here, that indicates a market pullback. Now, after you have the pullback, you want a short signal to be printed by the RMI Trend Sniper to indicate the official end of this market pullback. For this trade example, we can see that this is the candle corresponding to this signal, so this becomes our entry candle. Then for a price action confluence, you can see that this area actually had a pretty stable support level right here. You can see the support level was established right here, and then the price kept bouncing off it multiple times and then eventually broke and closed below it right here. When the price eventually breaks and closes below a strong support level, that indicates that the price may continue going downwards. Because of this, we're gonna enter a short position. The stop loss is gonna go right at the trend ribbon of the RMI Trend Sniper. And for the take profit, we're gonna go with 1.5 times the risk. Letting this trade run, and it hits take profit. In summary, the RMI Trend Sniper effectively identifies market trends and optimal trade entry points. Its integration of the RSI and the MFI elements provides a comprehensive market view, enhancing trading strategies, especially when combined with market bias and the support resistance channels indicator. Feel free to explore this awesome indicator and see what other strategies you can come up with. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. I'll see you next time.